The Australian dollar traded between 74.20 and 75.70. It was a volatile week. The ranges were narrower than we expected. The Australian dollar spiked to highs after CPI, though quickly reversed and was ultimately lower. Q2 headline inflation was 1% year-on-year, while the average core measure was 1.5%, slightly higher than market expectations. Concerningly, wage growth was low, which would reinforce RBA concerns that it would take longer for inflation to return to its 2 to 3% target. The Australian dollar initially dropped after the FOMC statement, as the Fed sounded more optimistic on the economy. But the Australian dollar bounced back quickly as the Fed gave no indication on the timing of future hikes. Markets continued to price in around 25% probability of a hike in September. Commodity prices also supported the Australian dollar. Iron ore traded up to $60 per tonne for the first time since early May. Markets expect further policy stimulus out of China. Coal prices rose to one-year highs. The key event in the week ahead is the RBA meeting. Markets are pricing in around 2/3 probability of a cut on Tuesday. Westpac continues to expect a rate cut in August. However, with CPI coming in line with the RBA's forecasts and economic growth holding up well, the RBA could justify moving in November instead. In the week ahead, we also have Australia June retail sales, trade balance, and dwelling approvals. Internationally, there's the Bank of England meeting. We expect the Bank of England to ease further, including a cut in rates, as well as a restart in its quantitative easing or money printing program. We expect the Australian dollar to fall on the RBA cut. However, with commodity prices and Australian yields still attractive, we expect downside to be limited to 74 cents. The top side, though, should be limited to 76 cents. We'll speak to you next week.